Hey guys, Tim Bratz here. Welcome to the Legacy Wealth Channel. And today's a special episode, kind of an emergency, not kind of, it is an emergency. That I was watching stocks and the S&P 500 has dropped by 5% in the past 30 days. 5%. That's not you're making 5% less of a return on your money. That means the principal value of your money. If you have money in most mutual funds and in the S&P 500, then your principal value on that money has been reduced by 5%. When your principal value is reduced, you don't need 5% to be back at break even. You need 6 or 7% to be back at break even. And every time, this is a huge misconception or unknown that a lot of people just don't realize in the stock market, is every time the stock market goes up and down and up and down and up and down, the reason these financial advisors and these brokers sell you based on the average return is because that looks a lot better than what it actually does to your money. Think about if you had $1 million in the stock market and dropped by 20%. You're down to $800,000. If it goes back up by 20%, you're not break even. You're at $960,000. So you need a substantially higher increase. And every time it goes up and down, it adversely affects. And it doesn't matter if it goes down first or up first, it's the same end result. To your dollars are less and fewer, far between. But here's the thing. You don't have to be subject to what's going on in the marketplace. You can actually take control over your retirement accounts. And that's what I want to talk about today. And so I've invited my very good friend, Amanda Holbrook with Specialized Trust Company to hop on here and talk about how to take control over your retirement account. And she specializes in this, has helped thousands, tens of thousands of people, has spoken in front of probably hundreds of thousands of folks, educating them on how to take their retirement account, self-direct it, put it in a self-directed vehicle, and then be able to direct it into whatever kinds of investments that they want to put it into. So Amanda, thank you for being here.
Thanks for having. I love this. I love the, emergency state of the union.
It is, right? I've been talking to my dad about this, and here's the problem. The problem, and I had a conversation with another investor about this, like, I don't know, 30 days ago, right before the market started dropping. And he goes, but it just keeps going up, right? The S&P hit, I think there were 27 highs that it hit in 2024. And it just kept going up, kept going up. But we all know laws of physics, what goes up must come down. And you get brainwashed into thinking, it's just going to keep on going up. How about you get your gains off the table and you don't lose what you've earned, and you had a great ride, and be okay with not trying to time the market to the absolute pinnacle. None of us have a crystal ball. None of us are Nostradamus and can see into the future and tell you what's going to happen. All we can do is be okay and be thankful for the gains that we got. And then let's take those gains off the table, and not in a way that makes it a taxable event either. We're going to talk about that, right? It's doing this does not make it taxable. It does not put a bunch of fees on it or anything along those lines where you're penalized for taking. It's just redirecting it into a self-directed vehicle. So Amanda, give me a high level of what you guys do and how you do it at Specialized Trust Company, and how people can take their retirement account and self-direct it.
Sure. So it's super simple. I mean, what we do here is true self-direction, Tim, where you can invest in what where you're not at the mercy of the stock market. You're not relying on the crystal ball to tell you what to do and then just buy, hold, hoping, and praying. So the same types of accounts, traditionals, Roths, SEPs, Simples, 401ks, HSA, CISAs, inheriteds, okay? All the same types of accounts you have over there, we have over here.
What about government accounts?
Yes. Yeah. So they're all government regulated, all IRS regs, all tax sheltered.
Well,
so
I guess I meant government employees. What did you say? 50 or?
So the types of accounts you can self-direct. Yes. So TSPs, I think that's what you're thinking.
TSPs, that's one.
All right. Yeah. So if you have an old TSP, 457s, 403bs, ESOPs, profit sharing, pension plans, all of these types of retirement accounts can be moved into a self-directed account. Okay. It's just going from one tax sheltered parking garage to another. So to your point, Tim, which is a great point, because I get this all the time, but if I sell my positions, I'm going to get taxed. No, you're not. It's in a bubble. It's in a tax shelter bubble.
Hmm.
But the key there, and I love the points that you're making here with the market, because right now, yes, we've seen a dip. You guys, it's gonna get worse before it gets better.
For
And I'm not
sure.
a chief economist. I don't have a crystal ball, but look at like the tariffs that are just passed, and like the automotive and the like the tech sector are definitely going to have a ripple effect. Those are huge sectors for the stock market. Those
The
go into
health
effect
sector, right?
next
Construction
week.
sector, all these
Yes,
things are going to
that's
be adversely affected by even
next
the
week.
discussion of tariffs.
Yes, that is next week. And you know what the week is after that? Your tax filing deadline. That means your contribution deadlines for your IRAs. So when Tim reached out, was like, we need to do a State of the Union. Like they need to diversify now. Yes, you do, because I sing this from the rooftops. The time is now. The one thing you pointed on, and if you're listening or watching this, please be honest with yourself. Have you really tried to time the market? I hear this all the time. And I'm like, seriously? What are your odds of timing that market? It's, oh, I'm down just a little bit. Do I rip off the band-aid now? The answer is yes. Because
Hmm.
you know what? Ask any seasoned investor when they got greedy, what happened?
They get their ass handed to them, right?
Yeah,
It's like trying to catch a falling knife. It's like you're in trouble, right? Like just realizing we all made amazing gains in the stock market in 2024. Let's be thankful of that and let's take these chips off the table right now and then put it into something that does not affect your principal value. Is what I mean, I've had this conversation with my dad who's like, it just keeps going up and my net worth has grown by this percentage over the past 12, 24 months. Dad, that's amazing. What we don't want is it to lose is to lose 20%, lose 30% over the next 24 months. And guess
yeah,
what? My dad's not in a position where or he's got time on his side, right? He's 70, he'll be 75 actually this week. And so he'll be 75 years old. He doesn't want to ride out a market for another 15 or 20 years in order to get those
no.
gains back. Like take the chips off the table in a way where it just self-directs it, right? And puts it into something that pays dividends and fixed returns. That was my advice to my dad, anyways.
Yeah, and for someone in your dad's position, or that's even closer to leaving W-2 world or pseudo retiring, getting into something that is providing you a consistent, predictable return, whether that's
Mm-hmm.
monthly or quarterly, that is not at the mercy of everything that's happening over here that none of us can control, is even more paramount. And I mean, if you're in that boat, you probably have some anxiety over this. Like, what the
I
heck
mean, he
do I
checks the
do?
stock market and does his personal financial statement every single day, right?
Yeah. Like
Can you
that's
imagine? I'm like, Dad, you're just stressing yourself out, man.
yes. Like
Stop
that's not
doing
good for
that.
your health. That dad.
Yeah.
That's not
And
good for your
so And so, all right, so somebody has one of those retirement accounts. You listed all those retirement accounts. There are some qualifiers to being able to self-direct an account. What do those look like?
Yeah. So being able to self-directed account is, if you have a heartbeat, earned income, social security number, you can have a self-directed IRA. Big qualifiers there. But if you're a small business owner, there's even more advantageous things there. If you have an existing account and it's not with your current employer, you can move that. So I want to repeat that. If you have an old 401k or old company plan or an IRA and it's not with your current employer, you can move that now.
So if
All
you
right.
are retired and you're not with an employer anymore,
Mm-hmm.
or you're not with an old employer, even if you're still working, but you have an old 401k from a previous employer or any of these retirement accounts, that is the idea. Or you can always start and open a new one.
Correct. Yes. So you have the green light. If it's your current employer's 401k, if you're 59 and a half, you have the green light. If you're not 59 and a half, though, there's a maybe. It's called an in-service rollover. Jot that down. Call your provider and ask if they offer it. It's like a
Mm.
50-50 shot if they do. But the key is, if you apply, like if any of these things that I just stated apply to you, you have the green light. You can self-direct. And right now, you have the double dip period, guys. So April 15th is the deadline for 24 contributions, especially if you're 55 and you do not have a Roth IRA. You better put some money in a Roth IRA to start that clock for 2024. Because guess what? Before you can take out tax-free profits, you got to have the account for 5 years.
Yep.
So, and you can put in so if that's you, you put in 16K versus only 8.
It's amazing. It's amazing. And yeah, I mean, there's so many good things that can come from it. So what are you seeing right now? I know you and I were talking last week.
Mhm.
One of our investors just opened up an account with you guys. You guys got it turned around pretty quickly and got it funded. He invested into our legacy cash flow fund because he was, in this exact same situation. He was
Mhm.
tired of the stock market going up and down and up and down and having all the volatility and unpredictable aspects to it. And we just launched our legacy cash flow fund. We're running a promotional rate till the end of April. We're paying 15% for the first 12 months. And then it reverts to what our normal terms are, which ranges based on how much they invest and the length of time that they invest. It ranges from 10 to 14%. The reason we can do that is because we actively utilize this as operating capital for different things. And we have like mezz debt, which is kind of like higher interest rate debt at like 20% that we're clearing out. We got about $15 million of capital that we can deploy. In our first 30 days, we've raised almost $3 million, which was pretty cool. And so
That's awesome.
we're gonna raise about $15 million. And anyways, this one investor of ours connected him with you guys. He had an
Mhm.
old 401k. He self-directed it. And the beauty of it is he had no idea. He thought it was in his retirement account
Oh yeah.
with his former employer, and he called up his financial advisor and he's like, yeah, send Tim the money. And the guy's like, we can't do that. Right. It's like we're registered investment advisors and this and that. You can only go in the stock market and only do these things. And so he had no idea. And from start to
Yeah.
finish, like he didn't even know self-directed was a thing. I connected him with you. You guys educated him on it.
Mhm.
And you then ripped the ball out of his hands, communicated directly with his provider, got the money moved over into specialized trust company. We filled
Mhm.
out all the paperwork, and you guys sent me the money. And it was like, I don't even know. I think it was 7 days or something like that.
Yeah.
It was
It
a,
was
a
quick.
very painless and very quick process. I was expecting it to be like 30 days or something, and it was 7 to 10 days, something along those lines. And
Yeah.
you guys made it. And he still doesn't even know what happened, right? He realizes it's with you guys, and then he was able to then invest and have a predictable return into our fund. And so, talk a little bit about what that process looks like in order to
Sure.
then get the ball rolling, and some of maybe the headwinds or the fibs, we'll call it, from their financial advisors of saying, because obviously the financial advisor doesn't get paid if the money's not with them. And so
Yeah.
they're biased into telling you that you can't do this, even though everybody can do this.
Yeah. I mean, he's a perfect example of that fib, Tim, because he was told by his advisor, oh, you can have a self-directed IRA here, and it's listed as self-directed. So he went and opened it. He already did it. So when he called you, he thought he did the thing. And his
That's
advisor's like,
right. That's
oh
because
yeah,
he's like,
yeah,
oh
it's
yeah, it is.
self-directed because he's making some money off of that. Um, yeah. So then he called me. He was like, well, I thought I did the thing, Amanda, and I didn't do the thing. So tell me the thing I have to do.
Yeah.
So it was very enlightening. But guys, to simplify it, decide, deposit, direct. 3 Ds. That's it. So, the homework or prep work you can do in advance, get a copy of your statement and ID, hop on my Alvana calendar here, and then I take care of the rest. My team takes care of the rest. The
Dude,
next thing you go
it is
ahead.
the ultimate who to do the how, the who to do the
Mhm.
what. I know enough about self-directed accounts to be pretty dangerous, right? I can get up in front of a stage and talk about it for 30 minutes, but I don't know the details, right? I can talk very high level. And honestly, I don't want to know the details because I have amazing, amazing resources like Amanda who knows all the details and can go into that. And guess what? Amanda, although I don't pay her, right, to work, and she doesn't pay me, by the way. I don't get anything out of
Right.
this other than we're very good friends. We support each other's businesses. She's a member of our mastermind, Legacy Family. And it makes my life easier by sending clients to her right? She's able to save them money. She's able to save their principal on their investment. And then she turns them back over to me, and then they can invest in my project. So it's such a good win-win where you've got these amazing power team members working with you, and it doesn't cost me anything, right? Like it's such a
Yeah,
cool structure. And then
absolutely.
I just rely on Amanda being the expert to then educate, just like I have her on this, right? Just like she's here right now sharing these details with you guys. You guys can utilize her in your own with your own audience, and it supports her business, supports your business, and helps the investor save more principal and earn more returns.
No, all around. Very well put. I appreciate you so much. It is a very tag team because I mean, you guys, we're a passive custodian. We don't recommend our doors to use investment spots. We're not attorneys, not CPAs. You guys have all heard that disclaimer before, but what the heck does that mean? That essentially means I am your person. I'm your team. Tim is your team. When you compare these two together, and you have the solution to make back the gains that you may have lost and put yourself on that right path to that consistent, predictable return.
Mhm.
And it's tax sheltered and it's tax free. And you can do it. I mean, you've seen us do some creative stuff over the years. You can partner those accounts together, if you're a husband and wife or you're doing this for your kids, et cetera, et cetera. So, the key is just, figuring out what you have. I always say buckets, and I know that's not a professional financial term, but you identify your buckets, right? Your
Well, I
resources.
think that's a great point because you're like, oh, well, the minimum investment is $100,000 into my fund, for instance, right? And you guys actually just did this for Mark Evans. Mark Evans came in on a deal of mine, I don't know, 2 or 3 months ago, whatever it was. And Mark has a bunch of little accounts, right? He's got accounts for his kids, he's got accounts for his
Mhm.
wife, he's got accounts for his parents, and none of them had enough to meet the entire volume of the investment, but they all had
And that's
chunks,
good.
right? And it's hard to then find somebody who's willing to take a $15,000 investment, right? Somebody who is at least qualified and doesn't take
Yeah.
$15,000 investments normally, and who's been in business for a long time and stuff. And so he was able to then take all these smaller accounts, group them together, and then make a $300,000 investment into one of our projects. And they proportionately split the returns that we're paying out to them.
Yeah.
And so I think that makes a great point, Amanda, is we can take these accounts and you can take your spouse's old account, your, parents' retirement account,
Mhm.
your account, self-direct all of them, and then get it up to a point where it meets the minimum investment amount, or you can go and buy that rental property with those funds. You can, and then everything either is tax deferred or tax free of all the returns that then go back into that account. Correct?
Yep, that's absolutely correct. Yeah,
Yeah.
that's how you solve things outside of the retirement account world, guys. We're taught creative deal structure, partnering, joint ventures, et cetera, et cetera. Take that same mentality and just move it over here.
Mm-hmm.
But the key is, especially when we're talking like the kids' Roths, something like for what you guys are doing, and you have that consistent, predictable return for that long at those percentage rates that are compounding. Okay, compounding over. I mean, if you've got how old's how old's P now?
She's 9, or she'll be 10 in a couple weeks.
Oh my gosh, she's gonna be 10 years old already. Okay.
I know,
So
it's wild.
she's got, 50 years before she can access that account. 50 years of compounding. I mean, play with the calculator, guys, when you can't sleep. Compounding interest
Mhm.
calculator. It's nuts. So that's where it's the power in your team and planting the seeds of those ideas, because I guarantee you're not hearing this that kind of stuff from your traditional financial advisor. I talk to frustrated clients all the time. They told me weather the storm. They told me I couldn't do that. They told me I made too much money to have a Roth, and that's all BS. Like,
It
look,
is.
if you're being told, oh, just sit tight, come, it's coming back, Trump's in office, whatever line you're being given, if you're not happy with your returns, do something about it. Push back, ask the questions. It's your funds. You need to take control and know of your buckets, what buckets you can access when. For those of you that are still in, a hybrid of, you might be in W-2 world. A lot of folks we work with have your side hustles, right?
Mhm.
How can you keep more of what you make? That's what the conversation that we have day in and day out. Where Tim's team comes in, is we give you the vehicle, they give you the destination and, the tax-free return. That's the nice part. That's the
Mhm.
fun part of these accounts, guys. you
Yeah.
know, you got to
You're
self-direct it, right? That's in the name. Just want to make sure that's clear.
Yep. No, it's and it gives the account holder, right? Like we all think we're susceptible to the market and we just have to go with whatever way the wind blows. And that's not the case. You can take extreme ownership and you should take extreme ownership. You shouldn't be allowed to make excuses about the market losing money and being like, oh, it's the market. Now I got to ride it out for another 3 years or 2 years or 5 years or 30 years. It's like, no, this is your money. You need to take ownership over it, and you should take ownership over it. And it's an empowering position to be in,
Mhm.
knowing you can self-direct your own retirement account. Like it's not enough people know about it, and it's
Right.
such a powerful, probably the most powerful. Um, it's up there, right? It's up with real estate and with a couple other types of investments. Self-directed retirement accounts, probably the most tax advantage though of anything else that's out there. And if you have a long-term vision and you can let it compound, right? Like some people come into our fund for instance with cash and they want predictable cash flow, or they're retired and they want the cash flow from it. But then you're right. The people who are a little bit younger can't tap into it anyways. Let it compound. Instead of 15%, that turns into 16 and a half or 17% annually on your money, which is unheard of, predictable without, any true risk to principal balance or anything. So, no, it's amazing. What is the QR code that's on your screen that people
Yeah,
can
so
scan?
you might be on a white here. So my gift to you is time. I'm willing to give you all of, all that's in this big old brain directly to you. So hop on my calendar. That's a link to my calendar. You can always see my availability. All my contact info is right here. But do yourself a favor and just at least have the conversation.
Mm-hmm.
It's not a matter of if it makes sense, it's just when.
Yeah.
And we've seen this time and time again. I've been
So,
doing
and
15.
here's a question that I would ask if I was, is like, how do you guys get paid? Do you guys get paid a percentage of what's in the account?
Yeah,
Like financial advisors do? Do you get paid a bunch of
no,
fees by who you direct them to invest with? Because you're not allowed to direct them where to invest. They have to
no.
do their own homework, right?
Yes. So the fees for a self-directed account, and I'm going to tell you because I always get someone like from a Schwab. They're like, I don't pay fees in my IRA. Yes, you
Mhm.
do. Chuck is not a non-for-profit. You're
Look
paying,
at the back of any one of your statements. You're paying at least 3 to 4% in annual fees on your money.
and then what's on the back end that you don't see.
Yep.
Especially if you're a mutual funds, guys, it's up there. But here we don't sell investments on the back end, so it's straightforward. So that's why all of our real estate investors love it because you have a setup fee, 225, annual fee based on the value of your account. So if you have a $200,000 account, it's only what 1225, and then we do an all-inclusive transaction fee, which is 425 and includes everything: unlimited buy sells, document handling, processing, and that's unique to our industry. Our industry kind of tries to function like a title company, like they ding, 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 ding.
If you do the math on it, it's less than like half a point
Yeah,
of is what
yeah.
it kind of equates
It's
out to. If
under
you
a
want to think
percent
about it
year
that
one.
way versus what brokers are charging, which is like 8 times the amount of money. And guess what? They don't care if your money goes up or goes down. They're still getting paid on it.
Yes,
And the other thing I think that's a big deal is you don't have to pay those fees out of your retirement account like you do with the
have an
brokers. They just
option.
take it
Yeah.
from your retirement account. Instead, like I pay my fees that I have for my accounts with you guys just on a credit card, and then I
Hmm.
pay for that when it doesn't drain my retirement account. So I think there's a
Yeah.
lot of really, really good benefits and simple things that you can do that save you a bunch in fees
Hmm.
and make a more predictable return, have more control and confidence over what your retirement can look like, right?
Yep.
And have additional resources of people who are in the same boat, rowing in the same direction with you, who can give you advice on what you can do and how you can do it. You still have to make the decisions, but Amanda is an unbelievable resource. So scan that QR code, reach out to her, connect with her, take the gains off the table, guys, of what you've already made in the stock market. It was a great 2024. We had a great run, but the
Hmm.
reality is things are starting to reset. And you got to take control, take the money off the table and put it into something that pays out predictable returns. I'd be looking for dividend paying type returns. Obviously, Legacy Cash Flow is available for you. LegacyCashFlowFund.com. Go and check us out there. But there's 1,000 other places that you can invest. And so, I'm doing this to empower you to take over control of your retirement account. And if there's things that we can do together, that's fantastic. And at the same time, like, go and take ownership over your retirement account. That's the main purpose of why we're doing this right now. So, Amanda,
Absolutely.
I appreciate you being here. We're going to share your contact information in the show notes as well. And thank you so much for all your support.
Always appreciate you, Tim and team. Bye, y'all.